Welcome to Late Night Stocks, Q3 earnings of vegan food stocks in the following weeks. What should we expect? Is there a danger in the vegan food market? Should we buy or wait now? Major ingredients of vegan food still up substantially, and that is stressing the food prices, causing inflation. For example, in soybean, prices are doubled after the pandemic. Although we had a correction, the soybean prices are still up 50%. The same applies to corn. Corn prices were doubled in a short period of time. Looks like prices will not go down as they go up. This will make pressure on food prices. Vegan food will be still behind the competition with the meat or beef products in terms of costs. Looks like this affected the general vegan food market and the growth of these companies. When we look at the year-to-date performance of vegan food stocks, Beyond Meat and Tattoed Chef are down more than 20%. Very Good Food is performing worse with a 65% down in stock price. Did we see the dip or should we wait and see the Q3 earnings? To answer these questions, let's go company by company. First, Beyond Meat stock. The company will announce its earnings on the 10th of November. Beyond Meat made an update for the third quarter outlook. They reduced their expectations. The company now expects third quarter net revenues of approximately $106 million as compared to prior guidance of $120 to $140 million, which is approximately 25% lower expectations. In this announcement, they said they were mainly affected by ongoing macro and microeconomic factors, including the new Delta variant. Delays in distribution and labor shortages were other reasons they provided. In addition to that, severe weather conditions caused 2-week production interruptions in the Pennsylvania facility. These are very negative news. Compared to 150 million revenue in the second quarter, 106 million on third quarter is pretty low. I really don't understand that. That is the summer quarter. Restaurants were open with fewer limitations. You cannot just say that the new variant was the cause. In this period of time, they should be going to $200 million, not $100 million in revenue. Last year, they were at the edge of profitability, and I was very optimistic with new McDonald's and Pepsi deals. However, looking at the new estimates, we are far away from profitability. Hopefully, we may see some profits at the end of 2022. I hear you're asking what is the bottom valuation of Beyond Meat? Will it keep dropping to $5 billion revenue market cap? Let's check the competitor, Impossible Foods. Impossible Foods company eyes to $7 billion valuation in fundraising. The company is in talks to raise $500 million at a valuation of $7 billion, but there is no agreement yet. Similar to Beyond Meat, Impossible Food products are also in stores like Walmart, Kroger, and Trader Joe. They have also an agreement with Burger King, being part of Impossible Whopper. We can say that they are more successful than Beyond Meat. Fundraising news like this shows that the valuation of Beyond Meat is not that overvalued with $6.5 billion. So we talked about what can be the dip. What is the top valuation for a food company? Can it make 10x and reach $60 billion? Are there some examples in the stock market? Here are some known examples from stock market, Tyson and Hormel Foods. Because they don't have growth, they have a low PE and price to sales ratio. Although Tyson Foods company has $43 billion yearly revenue, they have $30 billion market cap. If you look at the Hormel Foods, they have 2 price to sales ratio. What do I mean by this comparison? Beyond Meat is now at $98. If Beyond Meat got hyped and hit $250, which is $15 billion market cap, I would sell it. It is not a software company, so the market cap cannot reach $100 billion. What can be the next catalyst for the company? What is the Beyond Meat's last chance? McDonald's has started testing McPlant Burger created with Beyond Meat in 8 US restaurants. Really? Only 8? This is really low. They already started selling McPlant burgers in Sweden, Denmark, Austria, Netherlands, and United Kingdom. However, looks like McDonald's is not sure about the product for the US market. For example, rival Burger King added the Impossible Whopper to its menu more than 2 years ago. McDonald's and Beyond Meat announced a 3-year partnership, but 8 restaurants trial doesn't smell good to me. When we look at the stock price, Beyond Meat stock hit $220 after the partnership announcements of McDonald's and Pepsi. From the top, it dropped more than 50%. News doesn't bring revenues. Management didn't bring any good news since then. Now we are at the last stop before IPO levels. If McPatty sales become successful in United States and corn soybean prices come to decent levels, $90 can be the bottom for the stock price. I wouldn't hurry to buy the stock, I would wait and see bearish period ends. Let's continue with Tattooed Chef. The company will announce its third quarter earnings on 10th of November, same as Beyond Meat. Looks like we may see some volatility on the 10th. Tattooed Chef keeps increasing the variety of their products so that they address more customers and different segments of the market. It is not an easy job. They continued this strategy with a new acquisition. Tattooed Chef Company acquires Belmont Confections. They made the announcement that it is agreed to acquire for $18 million. The company said that it will allow them to enter $10 billion global plant-based bar category. It will open up more sales channels and this Belmont facility can contribute over $100 million annually revenue in 2 or 3 years. It is promising. As you know, they have products in frozen appetizers, breakfast foods, and meat alternatives. In the previous earnings call, they actually said that they will enter snacks. Acquisition of plant-based bar maker Belmont Confections is part of this strategy. It is important to have diverse products, but you need to be also available customers so that you can keep growing fast. The company is in line with its goal in terms of distribution points. 1,600 in 2019, 4,000 in 2020, and now 12,000 distribution points in 2021. I like this growth and consistency. For example, we don't see this in Very Good Food Company. They are very local compared to Tattooed Chef. However, we don't see the growth in revenue. With Q1 2021, they made a good impression, but when they announced their Q2 earnings, it wasn't satisfying. Their revenue has dropped quarter over quarter. This raised questions like, is the vegan food market still in early stages? It is written in the title that it is a strong sales momentum, but I don't agree with that. The company's guidance is around $240 million in revenue in 2021. This also shows that we will not see impressive growth in the following quarters. Between 16 and 22% expected gross profit margin is actually low compared to other vegan food makers. Here I checked the gross profit margin of food companies and compared them. Looks like selling frozen products lowers the gross profit margin due to high competition and costs. Very Good Food and Beyond Meat Company have higher gross profit margins that can help for higher valuation if they can bring growth in the future. The stock is now at $18 with $1.48 billion market cap. If we check the stock price technically, it broke this trend line and it is below moving average. That is why I wouldn't buy from here. If it drops to $16, I would add some shares to lower my price average. To have a bull run in stock price, we need to break $20 level, then it can go up to $24. This is not an investment advice, please do your own research. Let's continue with Very Good Food Company. The stock price is now at 2.09 Canadian dollars. After seeing 9 Canadian dollars in December 2020, it is in a bearish trend for almost a year now. The only good news was on 4th of October when the company announced its listing on Nasdaq. This listing brings no revenue to the company, so sell-off kept going. In their investing presentation, they have mentioned the growth and ramp up of Rupert and Patterson facility. The year 2022 looks a bit better, but the last 2 quarters were not promising. One of the reasons can be the lack of growth in distribution points. They are in the stage where Tattooed Chef in 2019. If you can't reach the customers, you cannot boost your revenue. If we look at the second quarter earnings, there was no growth, 2.65 million in Q1 and 2.78 million in Q2. Compared to these low revenues, the company made huge losses, 27 million total in 2 quarters. And they ended the quarter with 6 million in cash. This means they couldn't offer another 6 million loss in the next quarter. That is why 2 weeks after Nasdaq inclusion, they sold 15 million shares from $2 so that they increased their cash $30 million. This can last for 2 more quarters if they cannot boost their revenue. It means that we have another share offering risk, another sell-off risk 6 months later. If you look at the stock price, it came to before hype levels. Nasdaq entry made the stock price hit $3.55, but it wasn't enough. The stock price is in free fall at the moment. Next up is 1.7. Another share offering can make stock go lower. They need to work on distribution points and ramp up on production facilities. As a result, this corn and soybean prices pressure vegan food prices in the markets and make them less competitive with other products. There is no hurry to buy right now. Let's see what Q3 earnings bring. I hope you find this update video valuable. Please like the video. Definitely write your opinions in the comments down below. See you later.